fundsupermart.com.
Hi, what is your outlook for Asian equity markets in general over the next 2 to 3 years?
At Schroders, we feel that most Asian economies are in fairly good health. Certainly structurally, they don't face the same headwinds as most Western economies. We're seeing strong credit cycles, strong loan growth in most Asian economies. Interest rates are low. Monetary policy is supportive for growth. We're seeing healthy levels of investment and consumption in most economies. And against that backdrop, valuations in Asia are still reasonably attractive. We have seen a big move in stock markets the last few months. That's taken equities probably from cheap levels closer to what we think are fair values. But over the next few years, Schroders is focused on bottom-up stock selection. For the strong franchises, the businesses that are tied into that domestic growth cycle in Asia, we still see a fairly positive outlook. Broader market direction, though, obviously is still keyed into what's going on in the wider world. Last year, we had a lot of concerns about US fiscal cliff, European crisis, China hard landing. For now, those issues have been pushed down the line slightly. But for continued performance in Asian equities, we do need to see sensible political reform, sensible adjustment in the US and Europe coming through to keep those concerns out of the minds of investors.
What major macroeconomic trends will you be watching out for in 2013?
I think most economies globally saw a slowdown in growth through the second half of last year. Recent data is slightly more encouraging, both in the West and in Asia and in China. We're seeing slightly stronger economic growth. At the same time, interest rates remain low, as I mentioned. So the key for us is that we see both of those dynamics continue to play out, that growth does gain traction, particularly in the US, and that we don't see any shocks that are going to disrupt the interest rate outlook. So we're watching inflation in Asia very closely, and we're watching the growth cycle in the US.
China has rebounded strongly over the past few months. What is your outlook on the China equity market?
Yes, credit has reaccelerated in China in the last 6 to 9 months, and new investment spending has also picked up as the authorities have wanted to put a floor under growth following some fairly disappointing data in the middle of last year. The new leadership is also in place in China, and I think that's also removed some of the uncertainties last year. So we are seeing a sort of mild cyclical recovery in 2013 in the economy, and that will help earnings in some sectors of the market. And it's also taken away some of the risks that people worried about last year about a hard landing or a property crash or a banking market crash. So the short-term outlook in China does look healthier in the next few quarters. We at Schroders, we do still have longer-term concerns about the nature of the growth cycle in China, the over-reliance on fixed asset investment, and some of the fragility in the banking system. And we think that there needs to be some structural reform in China in the coming years. So although we see a more benign outlook in the coming quarters, we do remain very selective in the stocks and the industries that we're investing in within the China market.
Are there any geographical regions or sectors that you're more bullish or bearish on right now?
In general terms, in our portfolios, we want to be exposed to the strongest growth themes in Asia. And for us, that means the more domestic parts of the economy, domestic consumption. So that's areas like consumer cyclicals, property, insurance, healthcare, areas like that, rather than those industries geared into global growth, because we still expect a relatively subdued global growth outlook for the next few years. In geographical terms, the market where we have the largest exposure within the fund is Hong Kong. And that's less to do with the Hong Kong economy, but more to do with the choices on offer. Hong Kong is a very broad and deep market. It offers exposures to many different industries and sectors, regional companies, global companies. So again, as bottom-up stock pickers, it's a very attractive area for us to go looking for companies. We're also still fairly positive on many of the Southeast Asian markets.